Good evening and welcome back to Paisa Bolta. Most of you keep on asking me about mutual funds and how to select mutual funds. So I want to tell you my principle and why I vary and I vary a little bit. The idea of mutual funds has been around for a very long time. But in recent days, what has happened is indexing has taken over most of the mutual funds. We will explain why and we will understand what is indexing. आज मैं म्यूचुअल फंड्स के बारे में बात करने वाला हूँ. क्या इंडेक्सिंग क्या है, कैसे इंडेक्सिंग शुरू हुई, क्यों इंडेक्सिंग ऐसा एक कॉन्सेप्ट बेहतर है एक्टिव म्यूचुअल फंड से, और इससे इनसे प्रॉब्लम भी क्या हो सकती है, इसके बारे में आज मैं विश्लेषण करूंगा. एक्चुअली इंडेक्सिंग really started in 1970s with the formation of the Vanguard Group, and the man who started the Vanguard Group was a man called John C. Bogle. So John C. Bogle is the founder of indexing as we know it today. He died in January 2019 at the age of 89. He was born in 1929. And why was he especially interested in stock market? Because his family lost most of its money in the crash of 1929 just before he was born. And so it became an obsession with him. He studied economics at Princeton and did a PhD. In PhD, his topic was this indexation. So he was very clear on the idea of indexation. We will discuss what is indexation later. He joined the Wellington management in 1951 and persuaded them to change the following on one investment, their investment strategy, and became chairman of Wellington, but was later fired because he made a poor merger decision. In 1974, he started what is now known as the Vanguard Group with a total of $11 million in investment. In October 22, Vanguard has $709 billion. One of the main advantages of Vanguard is it is not owned by anybody. It is a mutually owned company. That is, the unit holders of Vanguard are the owners of Vanguard. This makes sure that you can keep the cost of fund operation very small. John C. Bogle retired as CEO in 1999 and has written 5 books. But the book I recommend for you all is the little book on common sense investing. John C. Bogle talked about 8 rules. We'll come to that later. What he primarily said is that it is impossible to beat the index, especially a broad index like the S&P 500. Why is it impossible to beat the index? Is because of the cost of management. Because to run a fund which is not an index fund, you need to hire fund managers and have a setup for research. That costs money. So in the good days, 2% of the fund was deducted as management fee. So 100 became, if suppose the company made 2%, your 100 rupees became 102, 2 rupees was deducted, you are back at 100. John C. Bogle figured out if he can take that 2 rupees out of the equation, then his fund will grow bigger. So what he did is he reduced the management fee to as low as 25 paisa, which is even lower today. So basically what happened is if both funds retain the same thing, 100 would become 102, you will take out 25 paisa and your capital will go to 101.75. For a year or two, this 2% differential between an active fund and passive fund will not make a difference. But 5 years down the line, if the same 2% equation continues, the passive fund will have 10% more money than the active fund, thus making it impossible for an active fund to catch up with a passive fund. That is why no active mutual fund has consistently beaten an index fund, because in 5 years the capital would have gone to 110. So it is very difficult to say in the coming year which fund will outperform the index fund. This year it may be one fund, so you'll have to sell and go back into the next fund. So you'll have to keep on churning your portfolio. And suppose you take an S&P 500 index and you buy that mutual fund. The fund collects money from everybody and invests in the S&P 500 the same way the S&P 500 is calculated. So the difference between the S&P 500 and the performance of this fund will be practically zero. At times there will be a small difference, and that difference is called as a tracking error. The bigger the fund, the lesser the tracking error. So you will have to choose a mutual fund, an index fund, which has a very low tracking error. So John C. Bogle set these rules. Select low-cost funds, because in an event two funds perform equally, funds with have a lower cost will grow faster. Over a period, it will not make a big difference, but over a period of 10 or 15 years, your capital will be almost 10% more than that of the active fund without you adding any extra capital. And once numbers go to that level, it's very difficult to catch up. This was practically demonstrated in a case that is documented as Long Bets 301, where a bunch of hedge fund managers challenged Buffett to put his money where the mouth is. That is, ask him to put $1 million on hedge fund onto an index Vanguard S&P 500. They put their money in a series of new hedge funds and said these hedge funds would beat the market and the bet would run for 10 years. At the end of 10 years, the winner would decide which charity would get 2 million, the total money. So it was very clear by the sixth or seventh year that Buffett was winning and winning big by a big margin. And the other hedge fund managers had to quit and admit that Buffett won. Buffett said stock picking is for professionals like him, but an ordinary investor cannot. It is preferable that they settle down on the S&P index. In fact, he has said about his own personal life, after his death, most of the funds of his wife would move to an index fund and some bonds for cash. So, first, you don't select any fund that costs money. Two, consider carefully about what added costs you are paying for that advice. Three, do not overrate the past performance. It is quite possible that the person caught the correct wave at the correct time. And beware of stars. You be nervous about star mu fund managers. Beware of the size of the asset. The bigger the active fund is, don't go near it. Don't own too many stocks. It is better to have 5 or 10 stocks at the most. Buy your portfolio and hold it forever. When people come to me and ask me, I ask them to hold their portfolio forever. They ask me when is the time to exit a stock or a firm. I say the only time is when the market changes its mind. If the market can change its mind, so can we. Thank you for watching Paisa Bolta Hai. I hope you like this podcast. आपने इधर आए इस पॉडकास्ट को सुना, इसके लिए मैं आपका आभारी हूँ. तो आपने इस पॉडकास्ट को सुना और आप इस वीडियो को पसंद कीजिए, ये चैनल को सब्सक्राइब कीजिए, बेल नोटिफिकेशन पर टीका लगाएं. तो अगर ये सब आप कर चुके हैं तो अपने रिश्तेदार और दोस्त के साथ ये वीडियो शेयर करें और उन्हें देखने के लिए परसुएट करें. धन्यवाद. नमस्कार. जय हिंद. Welcome back to Be Rich. I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich.